with this video, what I'm going to do is I'm going to go over how I intend, as of this current moment in time and my current understanding, to deploy Otis Hill's, aka Trading Education now, as approach of utilizing the 6 steps, utilizing the weekly time frame, support and resistance, identifying the weekly trend, but obviously with the Carlson twang, and then assessing the previous weekly candle close amongst the in-play and push relative to the weekly, which is the trend in play for me, and then factoring that in with context combination with the weekly support and resistance zone. So for example, what made me want to just do this video real quick was because I seen this support and resistance zone, and what we could do is we could just have it marked up on our charts and just be aware of it, and bear in mind too, just because we've got a zone marked up on the charts, it doesn't mean that as soon as it's come here we're going to react. No, we want to see how the weekly in, play out and push is structured. So at this point in time, it would be from this high to this low, and what we would want to do is see how the weekly in, play and push is structured at the time of trading to the zone. Now obviously for the first bar mitigation, that's what we would be referring to, so it would be as of this most recent bar close what we would be looking at, and how the weekly in, play at and push / trend and play is set up. At this point in time, it's still poised for the weekly intent to trade to be biased with favouring trading with the sell side. So what we would do is we would just see how the weekly chart starts to develop in this region. We would be a bit held back from sells anyway relative to the weekly in, play and push, because it's quite overextended and it's also trading into a zone. Obviously that doesn't mean that it's gonna stop or whatever, so still factually we would be still thinking the weekly push is probably poised to continue selling or pushing to the downside specifically, aka participants over weekly time intervals are still likely to be fit to favour pairing up with primarily the best bid side of the market, and basically see the best bid side of the market be predominantly acted or interacted with, based on the structure. But we're not focused on one singular pair. So we don't want to trade sell short side and going into an overextended weekly in, play and push into a weekly SR zone, right? So you would just go on to a different pair and then basically just wait how it starts to develop, to be fair. And basically from this region, we would just see how participants start a trade and basically contribute to the structure of the weekly in, play and push. And yeah, so every single time I start a video, it's usually when it's quiet, and then and someone always has to come in or something. It's a right nightmare, man. I'm looking forward to that day, whenever that is, where you've got your own place or something, and you can just fucking have a cupboard, an actual closet type thing, where under the stairs or something. Where you can just shut your cell in and maybe make it nice, and just put a padlock on the inside of the door so no one can come in. So yeah, and basically what we don't want to clutter up with chart too much, but first of all too. So what we would do is we'd just mark out the weekly SR zones that are at hand. So a prime example would be this. So as of the given week that you're looking at, mark out the weekly SR zones, see the weekly in, play and push, which is your trend in play. It's very iffy here. And then look at your weekly previous bar close on the 4-hour and see where it's situated amongst the weekly in, play and push, whilst it's set up the way it is to continue pushing, however that may be. Now, so yeah, it's 1, 2, 3, 4, 5. Well, I can't remember what the 6 steps are. Not gonna lie. So it was condition. Yeah, so this would be enough for me, just utilizing the weekly in-play and pushes, aka the trends in play, and then assessing the weekly bar close amongst the most recent, no, not amongst the most recent, amongst the in-play and push, which is your trend in play, and then also have your SR zones marked up too, to basically see at the context of what prices the market's trading at and where it might be pushing to / heading to. So yeah, like here, you've got like this push to the downside. It's set up done as of like this most recent bar close. Obviously, signs were unveiling, revealing. Signs were like revealing themselves with regard to market participants' intent to trade the underlying product, aka euro, Australian dollar, at this region of prices on this occasion, based on how they've already traded, like up to what led the market to be sat at this point, up to this point. But like the in play and push itself is kind of a bit iffy whether it's done or not, because it's look at the sell rejection. It's still kind of showing some signs to some degree, and then obviously you get like a doji, which is just like there's not really any conviction here, but then anyway, yeah, it's confirmed as of this most recent bar close, aka so from this bar close and then this bar just opens. That's what I mean. From this point, it is likely that this push to the downside is done. Well, it is done, not likely, and that doesn't mean that it's going to push to the upside. It just means that this push to the downside is done. Now, whatever happens from here, a new push could start to emerge. But at this current moment in time, there's a newly emerged push in play. And the trajectory of this and its angle, and the structure of it and how participants have shown they are willing to act with the prices that are defining the market in this region, and how they've structured the in-play and push, on top of how new it is and where it's situated within the previous and push range, high and low, it's likely to just keep on retracing. And then obviously, even from this point, it's a bit iffy considering the candle quantity. It's been pushing, are participants from this point going to be willing to continue buying the underlying product? It's because it's reached over extended territory, and it's kind of like there's a bit of a selling tail on that bar. It'd be a bit iffy as to what would be to happen next, so you would kind of want to wait for the next bar, and how that bar would suggest direction. And anyway, here we go. This bar, the way participants trade amongst the in-play and push, set the push up as done to the upside, and that the prices that define the market from this region on this occasion were poised to be primarily acted with on the sell side, until participants trade in a way that presents info relative to the candlestick structure that would suggest otherwise. Now, they do show some signs of, again, bullish intent unveiling again here, but then that's quickly resumed or halted or whatever. You get the gist what I'm trying to say, and it's like you continue lower. Obviously that changes, and then participants' intent to trade goes back bullish again, and it's likely from this point, this is a prime example, from this point relative to how the in-play and push is set up, and so you've got the trend in play, it's poised to continue going to the upside. You've got a nice pin bar close, which is contributing to the structured setup state of the in-play and push being the trend you analyze, comprised of the trend in play now of how market participants on this occasion have been willing to trade up to now, and how that's likely to continue. And then also you got your weekly SR zones. You kind of reacted here, and it would make sense to push back here, and what do you know, it does. So I guess what we can quickly look at is, as of the 9th of December, let's drop down and look for a trade setup as of the 9th. And now bear in mind, we don't look for exact SR flips. So for example, it doesn't have to come to this point, it just has to come to thereabouts. I'm pretty sure I showed this in my last video. And yeah, it looks like we would took a nice dub here. So so as of the 9th, so you would be looking here. That's the gap for the week, and I would just personally look for, I'd just look for about this region. That would be the region I'd be looking at, and then what do you know? And then look for a nice pin bar close. This is a bit iffy, actually, to be fair. I'm going to have to speak to Otis on what he would think of this. But, you know, it's not exactly what you would be looking for, to be fair. But it is a sufficient anatomic bar close, that's for sure. But I don't think you would have. It depends really where your stop would be. But like if you just had your stop there, you would have been actually okay, and you probably would actually with this. Like it's an engulfing bar. It's somewhat of a pin bar to some degree. And you would probably have your stop about there, just a bit below. Yeah, a bit below, and you actually would be good. And I think you'd be good anyway. So yeah, okay, fair enough, whatever. I'm gonna still speak to Otis about that though. It's for darn sure. But yeah, so that's like how I'm looking to do this. And so I guess what you do, how you would actually do this is at the start of every single week. That would be when you're drawing out when you're like, as I've seen that Otis does, highlighting his markets. So obviously I'm gonna have to like make a standard thing full of these pairs but without these things, because if I unclick this it's gonna go off the red list obviously. So and then basically I'll make a list of which of the ones are to keep an eye on for this given week. And yeah, so and then basically set my alerts at the areas and then keep an eye on my phone. Like it's not that hard actually. And then you've obviously got quite a lot of playing room too, like between your pairs. So yeah, we'll go back to GU. So like here I'm just drawing out the in play and pushes. These lines just delineate when the weekly push and play setup is done as of that most recent bar close. So as of this bar close, from this point, this push to the upside is done. That trend to the upside comprised of market participants intent to continue predominantly buying. That's finished on this occasion based on how they've traded. Like yeah, they have not traded in the way that is presented info that would suggest they are likely to sustain that momentum or sustain acting in the necessary fashion that would act as the fuel for that push to continue pushing the upside based on like where they traded in this way after how the traders have traded like up to this point or up like what after how traders have traded in the way that led to the market being set at that point, which we see how traders are traded like, you know, which is like, you know, push the downside setup is done as this bar close and then just push, wick reject at the very highs, ensuing structure too, you know, because it was a bit weird, didn't really retrace from this point, and you know, the push wasn't really set up as done as this bar close, and it resumed ensuing structure, like I just said, coming more overextended, and you know, you sat right at overextended territory with also participants trading in the particular fashion that shows us info, shows us their hand that they are no longer willing to trade except buying those prices on this occasion, you know, and it's quite likely they're going to trade the downside. So here's another instrument that we would therefore, and this has got nothing to do with weekly SR, right? Either, to be honest. So I mean, I guess you could also kind of make the argument if you look at my crosshair, you also are somewhat of a zone. But like on this occasion, I wouldn't even go off weekly SR. I would just drop down on the 11th of November, and then look for the first trade setup. You know, so I would have it marked up like tagged as Otis does to keep an eye on to show him what markets he must keep an eye on, and yeah, throughout that course of the week you'd be hunting a setup. And I would only take one setup per instrument. So like let's just say this one loses, which looks like that is the case actually. That would be me done with Euro and ZD. But yeah, let's just quickly assess this properly because we don't want to just blindly take any weekly SR because that like, I mean for our SR flip, you know. So as of the Sunday, which would be actually yeah. So no, we wouldn't be looking at this. Good. And I don't really think even if the market opened, let's just say this bar, we wouldn't be therefore looking for retrace. Yeah, look at it, it's sat right at the lows. So it was the 11th to drop down on. So this 10 a.m. So yeah, this is what we have to look at. I would honestly look for this region of prices like it just looks nice, you know. And then you've also got this potential to pop up higher into here. You've got this rejections and stuff. I guess you could kind of expand it a little bit, just actually bring the zone down to maybe say there, and then it's a bit more like realistic. And then you could just wait, and then what do you know? This is beautiful. This is like I'm saying this all in advance. I mean, I've never fucking traded this way. And then anyway, stop loss. This could be a loss still. Stop loss. I would, for a bar like that, I would personally just stick a bit above this. Obviously, you got this fair value gap. I hate I hate even mentioning that. It's such a shame though, because no, fuck it. Like fair value gap, and I'm not on IC. I don't trade. I think it's pretty clear I don't trade ICT. Not that it's bad or whatever, but I just know the reputation that those guys have, and that ain't me. You know, those Instagram 1 to 1,000 traders, 1 to 1,000 all and stuff. And anyway, as you see, we took a nice TP. And would I've actually be able to enter this? No. So unless I was awake at 2 in the morning, my time, I guess I could have entered there. It's basically the same price, to be fair. I know that money also enters on like these engulfing bars. But yeah, we probably would have gotten this, to be honest. Like we could have just got in there at 6 around this region, let's just say, and then like I would have probably just stuck stop loss there, and then targeted the 1 to 2. And so obviously we would have been in the trade for a bit longer, would have been getting a bit of heat here, and then obviously it takes out. But yeah, I'm not waking up at 2 in the morning. I'm like to trade and stuff. I'm just not. Like I'm just simply not. So like that's why I want to look at. What would actually be interesting is seeing whether, what was it, Euro, US, AUD, yeah. Was it? Well, could we have entered this? Same fucking thing. So as a matter of fact, we wouldn't have gotten this, and we would have missed it. It came down, break and retest, you know, came to the break and retest zone, and then you get your entry, and then you're done. Yeah. And then it comes up, breaks structure to the downside actually, and then this push and play, kind of just trickling up, trickling up, and then I guess from this point here, you could look at something, and then you get in there, which is at 10, which I actually could. Then stop loss, I would just stick at the low exactly, and then you maybe get a 1 or 2. Who knows? Let's just have a look. Yeah, you probably do. Yeah, maybe. Who knows? But I don't think I'm gonna do that. Like, if you miss a setup, the valid setup, hunting again, it's like, nah, you missed the boat. Get the next one. It's like you're not gonna make a fucking stick raft and sail across. No, that's a recipe for disaster. So yeah, obviously it could work, but it's like it's very low probability. So this is why I'm gonna look at instruments that like fit the time period I actually have available, which is like 6, 10, like, so the 10 a.m., the 10 p.m. bar close, 4-hour bar close, the 6 a.m. 4-hour bar close, the 10, and then 8, 11, 12, 1, and then I don't have any other else. So like I can trade the 10 a.m. bar, the 10, like, so if a setup has confirmed as of 10 p.m. I can trade it, and then obviously the same with 6 up to 10. So I can trade it, like that's not going to be an issue, but like I will miss some trades. especially the ones that just take off from the bat, you know, and that's a bit shame. But you know, we should be good if we just prioritize looking at instruments that center around like Europe. So yeah, same thing here. Euro Norwegian krone. So this is like a prime. So like this is a prime setup right here. 31st of July, Monday 2023. So we would be dropping down here, like because of this, you know. Like, well, actually, so you would here. Yeah, look at this weekly in play and push, man. Like push up, setup is done as of this bar close, push. Setup is done here, which coincided with pin bar close. On top of a kind of a SR region, like you've got like this, these zone, this high, etc. So 31st of July, 2023. So why I'm dropping down here is because this is a European solely market, right? So that you would be basically looking for. I'll not be much longer. So you would probably look for a setup around. So obviously, I'm gonna close this video off in a sec, but I'll just finish this setup because I don't know. So obviously you'd be looking for a setup as of the 31st of July, which would be here, and then I don't know, it's kind of really iffy to be fair. This, like, look at this chop. To be honest, I'd probably just wait for a retrace in somewhere at this region and then look for a nice bar close. And then anyway, that would be a right nightmare actually, now that I think, because you would have to be active on every 4. Well, it wouldn't be that bad, I guess, because it's like 4-hour time intervals, but I would probably just say to look for a setup around this region, anywhere here, and anyway you get one right there. And what do you know? It's 6 a.m. So you would execute a trade right here, and then you would stick your stop loss just right below. On this occasion, you'd be playing with fire, that's for sure, because look at all that liquidity. Like, of course it worked, which can happen, and it's not your job to predict. You just must execute under the right conditions. And anyway, on this occasion, I would definitely not. I would probably just stick my stop about here and hope for the best. That's all you can really do at the end of the day. To be honest, look at the playable range too. I would probably maybe give it a little bit more room to play out for some choppery. You know what I was meaning to say. And there we go. You get a nice 1 to 2. You're done. So I'm gonna wrap the I'm gonna actually just go as soon as it's kind of quiet still. So I'll just quickly go back onto the weekly time frame, and then I'll mark up some more SR. And yeah, this is exactly what I'm gonna go back over with Otis on like the next live call or something. But yeah, so this is GU. So basically, remember, I'm just marking up the weekly SR zones to then solely prioritize, focusing on how the in-play at-time push, aka trend in play, is set up to continue pushing or not. Analyzing the intent to trade comprising that push, and then basically assessing the momentum behind the push in regards of whether it's like to keep pushing, like, and where that in-play and push is sat snug within the two weekly SR zones that you must mark up. Your main ones, bear in mind, that GU one here is actually a live setup that I'm looking at. So obviously it reacted here off this weekly SR, and then as a here, it would, like how this bar closed, this is 4-hour SR by the way, like how this 4-hour bar closed amongst the weekly in play and push, it kind of set it up as done. But to be fair, now that I'm looking at this, I would probably maybe wait and just go on to another pair, because look how overextended it is, and then again you're really in the, like, close to the weekly SR zone. It's just a bit iffy. So yeah, if I just continue marking up the weekly SR, yeah. So I mean, I'm not gonna read this out. I can't be bothered. You can pause the video and read it yourself. I've already read it and I've already rambled on a lot. That's also like good enough for me. Anyway, yeah, I would probably actually change this SR zone to this. That looks a bit better actually. It's more like at hand. Like also you don't need to mark up SR for like to force it. You can just like, you know, you can't just go based off like the weekly trend too. Like for example here, you can see it's going straight up, right? And then you would analyze the weekly in play and pushes and basically go on board with them, right? So like for example, as here, this push didn't really set up. It would be a bit iffy here. Here it is likely to continue higher, but look, it's kind of at the to be overextended region, you know, and then like it's a bit iffy this, and then obviously right after this presents signs with regard to how trades are traded, like after they'd already traded the way they had over consecutive time periods up to this point. That presented info what would suggest that this push may be near and being done, right? And then anyway, the actually started trading lower. This is a nice bar close because it's like, you know, it just makes sense, you know. Maybe it's because it's more playable range and it hasn't already pushed yet, like over many time periods. Also price coverage, like this push hard up to this point, you know. So yeah, you don't need to have the weekly SR zones, but it is good. So like here, it's just if they stand out, to be fair. Like here, this is a really good one. I would maybe just mark up this like that. Like this is fantastic actually. Now that I look at it, GBP card. I'll be surprised if orders didn't actually take this. But yeah, so you've got this nice weekly SR zone here. I'm actually going to just make this a little bit larger, like there. But look, if you look at this, you know, push down, push up, push down, push up. Actually, this push kind of setup is done here. Then ensuing structure unfolded. Further signs with regard to waning intent on the buy side unfolded. This was like an old man on his last wins, giving it his all, but you know, it's like, is this actually sustainable? Probably not after this, and you know, then comes crashing down. And then here, this push to the downside setup is done, which also coincided with the weekly SR zone, and then obviously the weekly pin bar, and then you could just drop down on the January the 20th and look for a 4-hour setup. And well, and this is the last one I'll do because you kind of get the gist, but yeah, I'll be really surprised if orders didn't actually take this. So obviously it dropped down as the 20th. I just want to shut this video off kind of like now, so I'm not going to emulate real time. But yeah, so you would just look for a weekly SR zone. So I would kind of, I don't really know. So this bar close here, so you'd be dropping down on the 20th. So you would be limited to solely you would have to wait for kind of like this bar to close, so you'd be here. So then yeah, I would actually look for this. I'd just look for a nice bar close within here. You didn't get that, it just then pushed to the upside again. Look for another break and retest. Remember, it doesn't have to be like exact, it just has to be thereabouts. And I actually think orders did take this trade, which I've happened to just locate too. You know, this isn't really something sufficient. It's an okay bar close, but it's not really sufficient. And anyway, this bar, it just screams like get in. And then anyway, you would I would personally have my stop about, I would probably just have my stop at the low, maybe it's just a tiny bit below like that, and then target a 1 to 2, and there we go. So that's how I'm looking to do it, and I think that is something that you can work with. That's for sure, because it's all able to be mimicked. Like in no, it's all able to mimic real time, going back through the past, which is what you want to look for in a flow based approach. And yeah, I mean, we'll see with real time execution. But yeah, I'm going to cut the video off now. This is actually a pretty good video going over the Otis Hill approach, and yeah,